Peace, guys. Good evening out there. It's Sunday, the 13th. Coming to you live at about 8:30 p.m. We're ready to get into the charts for this week. It was a good long weekend, just a standard 2-day weekend away from the markets. And I find it so important to come back on Sunday, come back on Monday morning with that fresh perspective. Whatever that means for you, it's just super important to find it and be consistent with those habits. For me, staying fresh, it means being consistent with things like hitting the gym. Like, I actually like to meditate. I found that super helpful for staying focused and staying level-headed when I come to the markets. It's just meditating. Sit with your thoughts for 5-10 minutes. See if you can build up that intensity over time and build up longer periods of meditation and focus. I like to read. I like to take long walks. And sometimes I like to sit down with my thoughts and, journal. Write down my trades, write down things that I think I did well, maybe things that I think I could do better in the future. All these things help me to be more objective and to come into the markets with a fresh perspective. And when I say objective, let me give you some context. Being objective is really one of our main goals as traders. To be objective means to come into the markets with a neutral perspective. No bias, no expectations, no needs or wants of the market to go up or down. Just simply viewing the market from a neutral standpoint. And always being ready to capitalize on our edges and our trading patterns when we see them. So today when we look at SPY from a neutral perspective, we have to see that we've been able to consolidate here just a little bit around this 620. Healthy form of consolidation. These are things that we look for as traders as potential moves to move higher. Now, I've got a new indicator up here for you guys today. It's not new to me, but if you haven't heard of it before, I recommend you get familiar with it because this is called the RSI, or the Relative Strength Index. Okay, so down here we're going to come down to indicators. We're going to hit our volume. We're always going to be looking at volume. We're always going to be looking at price performance or just the candlesticks. And then we've got our moving averages, our overlays, right? We've got our simple moving average at 200. We've got our simple moving average at 50-day. All those it's an average of price across this time frame. 200 seems to be it's the most popular moving average that you'll see traders applying out there across the markets. Everybody looks at the 200-day. You should too. The 50-day is the second most utilized moving average out there. Very important one to keep an eye on and to plug into your charts. I like to use the exponential moving average here on the 20. The only difference from an exponential moving average and a simple moving average is that an exponential moving average, it's weighted. It will actually weigh in the previous day's price action more than the farther days in that span, right? So if you've got 20 days spread out, it puts more weight into the last 1 day and then the last 2 days and the last 3 days than it does day 17, 18, 19, so on. It's weighing in the recent price action. And it's usually a little better for short-term momentum traders, kind of like we are. It gives us an idea as to where the market's at right now. The 200 MA, it's simply, it's averaged out equally over the last 200 days of trading. It's a long-term indicator. The RSI, I told you guys we got the RSI plugged in here. The Relative Strength Index will be this box right here below. What the RSI does is it gives us a good indicator as to where the stock is historically from an overbought or an underbought perspective. Okay? RSI is on a scale of 0 to 100, as you can see here on the chart. Anything over this blue line is over 70. And according to the RSI, over 70 is an overbought indicator. Okay? As you can see here in the past with SPY, going back the last year, every time we've got over, well, we've only gone over bought once, and we sold off pretty quick. In fact, we sold off almost all the way back to the 200-day moving average. Every other time when we approached the overbought territory, we got rejected. So here we're trading in overbought territory. In no way am I implying that this thing's gonna tank. That's not what I'm getting at here. It looks healthy. Everything is constructive. But we're infringing up on this point where the risk to reward isn't so much to the upside. Okay, now the scans told me that SPY is 13% extended from the 200-day moving average. Historically, that's about middle of the road. We've been 20+% extended from the 200 MA in the past, but typically we like to trade in that 10 to 10% is typically when we're starting to infringe on that. Yeah, the risk to reward, again, it's probably not as much to the upside as it is to the downside. So keep that in mind. QQQ, same sort of situation with the QQQ on the chart here. QQQ, a few touches up here in this overbought land. Pretty good extension from the 200 MA, but we look constructive. The market's strong, and if things hold, news headlines don't come out, Trump and Elon stop beefing, and tariffs stay away, I don't see any reason why we can't continue. We can't continue. It'd be nice to get some pullback here, some contraction, kind of find our footing here in this 540 on QQQ. Would be really a nice spot to potentially eye a dip here. Just keep in mind, the RSI is showing us we're a little extended, 200 moving average. We're pretty far off that red line. And a more comfortable setup would be one with some pullback here. So keep that in mind when you're scanning. That's the broad market. That's the cards that it's given us. Bitcoin had that fresh break above 110, straight to 120. Just a easy move from Bitcoin. Easy move. The volume wasn't super impressive. A little bit of a red flag on the Bitcoin there, that volume wasn't very impressive. But nevertheless, we got that range. Every time we contract, we have to expand. And we got that on Bitcoin. Explosion right there. Explosion on Bitcoin. Okay, moving on. What the hell? Hold on. Sorry about that, guys. The screen crashed out. All right, Apple. First stock we're looking at this week. Apple. You think about the broad market here. SPY's at all-time highs, all the way up here. When you consider that Apple makes up a large percentage of SPY, it's the largest market cap stock in the market, and SPY's way down here at 210. It's 50 points down from its all-time high. This is the type of setup that I see something like this, and I don't think it's out of the realm of possibilities for SPY to continue higher. Because if something like Apple gets some steam, well then heck, the market's going to benefit from that. Absolutely. And SPY's kind of setting up right now, this little cup and handle formation. It's got this higher volume here on this new range of data here. And it's got a nice little sideways pattern between 215 and 205. The risk to return looks pretty good here to target a trade up to the 200-day moving average. 215 obviously being a key reject level. But down below we've got support in the way of these wicks right here. We've definitely got downside support in 206 range. So I've got some levels mapped out on SPY, on Apple, excuse me, some day trade levels where I'll be looking to potentially, I'm looking to catch a dip in this 206.64. If it presents itself, I think buyers step in here. I think buyers step in heavy. But the risk to return looks pretty good on Apple to target a trade up to that 222, keeping risk around that 206. Right in that ball, and that's the ballpark we're looking to, potentially cut this thing. But Apple looks pretty good. I like the clearly defined levels. I'm going to post this in the Discord tomorrow morning. The levels, we post levels on SPY all the time, but Apple's really clearly presenting itself this week. So I'm going to kind of substitute the SPY levels for the Apple levels and look at potentially capturing some trades on Apple this week going forward. I like the setup. SMCI, again, steady on the watch. It's just been a long-term shape-up type of chart here. Higher lows, higher highs. And we've got this swing high right here of 65. Above high from last week, this thing could open up. Just could. So I like the risk to reward. Still keeping my risk understood here. I don't want to lose too much in this thing. I just don't. If it loses too much, you cut it, you wait for it to set up again. You just do. I'm not trying to buy this thing on the dip. You know what they call that? They call that trying to catch a falling knife. Right? You're going to get cut every damn time you try to catch that knife. We don't buy stocks into weakness, we buy them into strength. And SMCI is the type of chart I'm not trying to buy against the trend. The trend is obvious to me here. The trend is bullish since November. We're consistent higher highs. We're consistent higher lows. I'm looking for a consistent higher high to follow through here. Why would I waste my money buying this thing on the downside? I'm going to catch it on the upside. It's just a matter of how much it consolidates, how much contraction we get here between these two blue lines I just drew. Anything contracting in between there, super, super constructive and healthy going forward. So keep an SMCI at the forefront for the trade. SLDP, we got what we wanted to out of it. It hit that 270, and now it's getting a little sell-off. We're going to form that little handle. I would hope we would. I would hope we form some contraction here back to the EMA 20. And maybe we can get a couple weeks of sideways in this thing. Boy, would I like that. I'd like that a lot. Guys, that's all I'm staying kind of a little nimble with the watch list due to the SPY, the QQQ, being up here in these all-time ranges. Being up here in extended territory on the RSI. Being up here at 13% extension from the 200-day moving average. We could see some follow through this week, but we have to be, from an objective perspective, the risk to reward is to the downside at this point. So keep that in mind. Stay sharp out there. And let's have a great week of trading, guys. Again, always remember to respect your risk. Live to fight another day, because there's traders that don't. There's traders that go broke day in and day out there. So don't be one of them. Respect your risk. Go in with a fresh perspective and have a plan for what you trade. Peace, guys. Have a great night. See you tomorrow.